Hi, this is Lara at Elliott Wave Stock Market with an extra video update for you after the session. Thursday 29th of September has closed. Yesterday's analysis was indecisive. The main preferred Elliott wave count required downward movement, but technical analysis suggested we were going to get upward movement. We've got downward movement and that preferred Elliott wave count is starting to have a really good look. Tomorrow I'm expecting to see another red daily candlestick or possibly a doji if we see a deep second wave correction short term. Overall I'm expecting downward movement and the target at 2135 may be met in 1 to 3 days time, and then the upward trend should resume. Let's look at the wave count. I'll go over the weekly charts quickly. There's a bit more depth in my beginning of the week video. This wave count and my alternate both see a cycle degree fourth wave over here and a cycle degree fifth wave beginning here. Within cycle wave 5 we have so far 1, 2, 3, 4. We need a fifth wave up. Now note also we could move the degree of labelling within this 5 wave impulse all down 1 degree. It also is equally as possible that only primary wave 1 within cycle wave 5 could be unfolding. When we have the next little 5 wave up complete, and from the low back here at 1810 on up to the high we have a good clear 5 wave structure complete upward, I will have 2 wave counts. I will have this one which will see a big trend change at supercycle degree, and I will have an alternate, or probably it might actually be a main, because I like to assume the trend remains the same until proven otherwise. I'll have a main wave count that moves everything down 1 degree and sees a first wave complete up within cycle 5, and then we'll be looking at a deep second wave correction to unfold. At this stage I'm going to leave the labelling as it is, and we expect that we're going to have some more upward movement to complete this final fifth wave. At 2233, primary wave 5 will reach 0.618, the length of primary wave 3. Primary 3 has a 0.618 length to primary wave 1, so that pattern may be continued and may be repeated if primary 5 also exhibits a Fibonacci ratio. Within this 5 wave structure unfolding upward, this third wave is shorter than this first wave, so that the core Elliott wave rule stating a third wave can't be the shortest is met. The fifth wave is limited to no longer than equality in length with the third. At this stage it looks most likely that this fourth wave is over. It is possible though that it could continue further, but it would have to be a very rare triple. Triples are very rare, so the probability of that is very low, but it is possible. If it does continue, it can't move into first wave price territory below 2111.05. This lilac trend line is proving to be very important still. Draw it from the prior all-time high here at 2134 to this first swing high within this short-lived bear market here, extended it on out on weekly and daily charts, both on a semi-log scale. Keep drawing that trend line. It's going to continue to be very important. If and when price again turns around to touch that line, expect again it should provide strong support. If that line is breached, I'd then be expecting a throwback to resistance. This line has high technical significance. Let's have a look at the daily chart where primary 3 or intermediate wave 3 of primary 1, also that's entirely possible. The third wave ended here, a fourth wave double combination ended here, and now a fifth wave looks like it's unfolding as an ending diagonal. A few days ago I had 2 hourly charts looking at the other structural possibility for this fifth wave, that of a simple impulse, but it's been invalidated with this downward movement, and so the only idea left now for the fifth wave is a choppy, overlapping, ending diagonal. They are terminal structures. The classic technical analysis equivalent pattern is a rising wedge. An Elliott wave ending diagonal requires all of the subwaves to subdivide as zigzags, so we have a 5-3-5 zigzag up for the first wave, a 5-3-5 zigzag unfolding lower for a second wave, which may not move beyond the start of the first wave below 2119.12. Here's that lilac trend line copied over from the weekly chart. Final support, if intermediate 2 got that low, would be expected to be very strong at this lilac trend line. Let's have a look at how this looks at the hourly chart level with the end of intermediate 1, is this high up here. Intermediate 2 must be a zigzag. So far we have 5, 3, and we need a 5 down to complete. At 2135 now, minor wave C would reach equality in length with minor wave A. That would take intermediate wave 2 down to within the target range. There's a common depth for second and fourth waves within Elliott wave diagonals between 0.66 to 0.81 the length of the first or third wave. And so here, intermediate 2 would reach 0.66 the length of intermediate wave 1 at 2140, and 0.81 the length at 2131. So the target is within that range. It has a good probability. The most common ratio between A and C waves of zigzags is one of equality, so that target has the highest probability of any target I could calculate for you. It also coincidentally happens to be pretty close to that prior all-time high, just above 2134. And so I would expect, if we get down to this price point, that we should find some pretty strong support there. And my only question today at the hourly chart level is what degree to label this unfolding impulse. My first inclination was to label it minute 1, 2, 3, 4, but then that'd be expecting quite an extended fifth wave. Now that may well be possible, but I think it's more likely, because it's more common for the S&P to have an extended third wave within the impulse of minor C. And so I expect we may only have minute wave 1 complete, with 1, 2, 3, 4 needing the fifth wave down to complete early tomorrow. That would be a 5-wave impulse complete down, and if it ends above the end of minor A, I would not want to label that as minor wave C in its entirety, because it would be truncated. That would be quite unlikely. And so that would probably be just minute wave 1, and that should be followed by a second wave correction. Now, depending how quickly and how deep that second wave correction is, how quickly it unfolds, we may see a doji candlestick tomorrow. Now, it could be a red daily candlestick. If we move into the middle, strongest part of minor wave C, the third wave within it, then I'd be expecting a strong red candlestick tomorrow. But if the second wave correction to come is more time consuming, then we might get a doji or possibly a small green daily candlestick. I think red is more likely though, and that's supported by volume. If minor wave C takes another 3 days to unfold, then that would see intermediate wave 2 total of Fibonacci 8 days or sessions, and it would then be even in duration with intermediate wave 1. And that's the other reason why I've chosen this degree of labelling at the hourly chart level. I expect it's fairly likely minor wave C is going to take another 3 days overall to get down to this target. At the weekly chart level, this is an alternate. It's identical to the main wave count up to this point here, apart from the degree of labelling, where here it's all moved down 1 degree, and after that it differs. Let's have a look at the difference at the daily chart level, where the third wave is ended here. Now, instead of the fourth wave being over here, what if it was over here as a running contracting triangle, and we have a very short little fifth wave? At its end, this fourth wave triangle meets all Elliott wave rules and did affect a net retracement of the third wave, but it's only half a point. No rules are broken, no guidelines actually are broken, and it does have a reasonable look, but I think that it does reduce the probability. A half a point retracement is remarkably shallow. It's entirely possible though, and we should consider all possibilities. If we have a 5-wave impulse complete up here, then we have had a big trend change. It's looking increasingly unlikely, but again, consider all possibilities. From this high to this low, this downward movement is now complete. This is a complete wave, and it's a 3-wave structure, not a 5. And so I would not want to move the degree of labelling within this impulse up 1 degree and look at the possibility of a supercycle trend change here, because a trend change of that magnitude should see an obvious 5 in the new direction, not a 3. And so that's why I'm labelling this possibly only wave 1 and now wave 2 unfolding lower. It's possible that wave 2 was over here, but it would be very brief and it would be very shallow. What's more likely is that that was just the first zigzag in a double zigzag. Double zigzags are actually pretty common structures. Here we would have the first zigzag in the double. The double is joined by a 3 in the opposite direction labelled X, and here we would have the second zigzag in the double with a 5, 3 and a 5 down to complete. This one expects a long extended C wave. If we're looking at a double zigzag, then the second zigzag in the double should deepen the correction because that is its purpose. In order to achieve that purpose, the X waves are usually brief and shallow. This one's somewhat time consuming, but it's relatively shallow. This upward zigzag here is less than 0.9 the length of this downward zigzag, so we can't be looking at a flat correction for primary wave 2 here, and we can't relabel this A, B, C, with A being a 3-wave structure, because the B wave has not met the minimum requirement of 0.9 the length of the A wave. That tells us a double zigzag is more likely, which tells us the second zigzag in the double should move substantially beyond the end of the first zigzag because that's its purpose. The 0.382 Fibonacci ratio, about 2038, is the expectation here, but at this stage, if this wave count's correct, that's looking a bit too optimistic. Finally, for this wave count, it just isn't really having as good a look as the main wave count. I'm only really publishing it because it's important to always consider all possibilities. The subdivisions at the hourly chart level, 5, 3, 5 down to complete, are exactly the same as the main wave count. No divergence in the expected direction there. Let's jump into the daily chart for some classic technical analysis and make that a lot bigger. Yesterday we had a strong green daily candlestick with a long lower wick, and it came on an increase in volume. That was looking fairly bullish, and I was expecting from this classic analysis we may well see another green daily candlestick. But the preferred Elliott wave count required downward movement. That's what we've got. Now we've got a stronger red daily candlestick, and it's come on a strong increase in volume. Now this is quite bearish. With this increase in volume, it's telling us that the fall in price has support from volume. The bears were active and more active than the bulls, and they were able to push price substantially lower. I would expect, following that, we're probably going to get another red candlestick, at least one more, if not another 2. Overall though, ADX is still declining. It's still telling us that this market is not trending. ATR has a slight uptick today, and slightly flat to slightly increasing the days before, but overall it's still mostly flat, mostly in agreement with ADX. And Bollinger Bands are slightly contracting again. So with those 3 indicators all mostly in agreement, we should assume that this market is not at this stage trending. And so we can assume it will swing from resistance to support and back again. And so that technique isn't really working that well either. Stochastics is coiling up and price is coiling up. We will get a breakout and the trend will return, and to look at what direction that trend is likely to be after we move out of this big consolidation, we can have a look at volume, and it's downward days which have strongest volume, stronger than upward. This trick though, I used it at the monthly chart level prior to the invalidation of that previous all-time high at 2134, and that trick just didn't work. It might again not be working for the S&P. I've added a new trend line today to on balance volume. It's come up and found resistance at this trend line. This has got a shallow slope and it's repeatedly tested and long held, so this trend line has strong technical significance. A move down and away from that trend line is a bearish signal. It may find a little bit of support at this new trend line, but this is too short, steeply sloped, and infrequently tested to have reasonable technical significance. So on balance volume might find a little bit of support there. If it moves through this line and just breaks straight through it, that would be a weak bearish signal. This line has more technical significance because it's more often tested and it's longer held. If on balance volume gets down here, we should expect some reasonable support there. So we've got a bearish signal today from on balance volume and a bearish signal today from stronger volume supporting this fall in price. Overall, those 2 indicators should be expected to be telling us we're going to get another red daily candlestick tomorrow. On balance volume has been working quite nicely lately with trend lines, so we'll expect it to continue to do that. Let's have a look at VIX and see if there's any divergence between these two small swing highs. There's no divergence between price and inverted VIX. And now between these two small swing lows, no divergence here either here to tell us the direction for the next 1 or 2 days. What about the AD line? Again, no divergence between these two swing highs and no divergence between these two swing lows. There is actually, if we want to be really picky, slight bullish divergence between this point here on the AD line, which corresponds to this daily candlestick here. It's this point here. We've got a slightly lower low from the AD line, but price made a higher low. That tells us there's a little bit of weakness in price, but it's so minuscule. I don't think it's significant enough to note and expect that it's going to tell us we're going to get upward movement. That's not what I would expect. I would expect only that from more reasonable divergence. That's all for me at the end of the day with your extra video update. I hope that all of our members are having a fabulous week.